Hello, I'm Lance Zimmerman with the CattleFax Closing Bell, brought to you by Zoetis. Early indicators suggest the restaurant segment will continue to struggle in early 2013. The National Restaurant Association released its December 2012 results for the Restaurant Performance Index, and the results continue to be concerning. The index was at 99.7 in December. It's the third consecutive value below 100 for the index, and values below 100 typically signal contraction in the restaurant industry. The index itself is based on survey responses from restaurant operators throughout the United States, and the measurement has multiple components. The current situation component of the index provides a glimpse of what's occurring in the restaurant industry now regarding sales, traffic, and business issues, while the expectations component of the index looks at many of those same issues based on operators' views of the next 6 months. The current situation index value was at 99.1%, the lowest value since January 2011. Compared to the previous month, same-store sales declined 2.1% and customer traffic declined 2.5%. Another threat has been labor issues, which have been below 100 on the index since July. The expectations index component remains relatively strong. Operators are optimistic for future growth in same-store sales and feel relatively neutral about staffing and capital expenditures. The most bearish attitudes about the future remain with business conditions, which are down nearly 2% since September. CattleFax expects struggles in the restaurant business to continue in 2013, contributing in part to our expectation for wholesale beef demand to be 2% lower this year. Lower consumer incomes will continue to threaten traffic and sales volumes. Casual and fine dining restaurants that are innovative in their beef product offerings and continue to deliver value to consumers will generally perform better than others. Fast food restaurants may struggle with record high ground beef prices, but quick service restaurants will likely perform well as they continue to deliver an exceptional value to consumers. The Fed market improved this week as sales in the South occurred at $125 per hundredweight, which is $3 higher than last week. The North has yet to trade as we go to recording time, but holds a higher undertone. Feeder cattle prices were $2 to $4 higher this week, while calves traded $2 to $4 firmer as well. Slaughter cows were $3 to $4 higher, with supplies declining. Lighter weight feeder cattle noted the full advance on limited price offerings this week. Boxed beef values slipped again this week as demand remains seasonally low and supplies are still ample given the current slaughter levels. Corn values firmed this week due to concerns about the crop in Argentina. The USDA released its semi-annual cattle inventory report this afternoon. The total cattle inventory came in at 98% of a year ago, while the annual calf crop was recorded at 97%. Feeder cattle and calf supplies outside of feedlots were mostly steady at 25.5 million head. Thanks for watching, and remember to visit CattleFax.com to become a member and receive the latest market news and analysis.
The beef business has never been for the faint of heart. The pressures are real, the risks are high, but the opportunities have never been greater. So how do you sort through it all to decide which way to go? For more than 40 years, CattleFax has led the way. Become a member at www.cattlefax.com. We're the time-proven leader in research, analysis, and information, equipped with the industry's most powerful database. Our team is impartial, objective, our vision is global, and our focus is you. CattleFax, the deciding factor.